This conference will now be recorded.
All right, good morning, everybody. This is Greg Morton. It's actually Sunday, February 6, 2022. I made my slides yesterday. I just didn't get the recording done. And this is the weekend update for the Greenville Eastside IBD meetup group, as well as the Stockyard meetup group. As always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. And it's very clear that all investing has substantial risk of big losses. So we want to learn first and only then invest. So today, let's look at the M factor. Are we red light, yellow light, or are we IBD green light? Current trading plan, still seeing very cautious environment, but maybe it gets better soon. We'll look and see what the current setup status is as far as Canslim growth stocks. And then I'll talk about the agenda for our meeting, which will be this Tuesday at 7 p.m. Eastern at the Stockyard meetup site. So as we know, the M factor is the most important letter in Canslim. Bill O'Neill said that 50% of being successful in Canslim is being right on the M and investing in accordance with the trend. And so he determines that by looking at the action of leading stocks, the actions of stocks owned, which is not very much right now, and then the market pulse, distribution day count, price and volume on the indexes. So this week we had a day 6 follow through day on Monday. We sort of had to squint to see it. Volume came in right at the end of the day, and this was on the NASDAQ and the S&P 500. Both had follow through days, and I even counted it as a follow through day on the Dow. I think it was up 1.2%. They really didn't talk about that in IBD, but they have used the Dow for a follow through day in the recent past, so I'm sort of tracking that also. Big issue still, lack of Canslim bases and bases setting up properly. So let's just go look at the index charts, the Excel spreadsheet coloring book, and the group teaching portfolio. So let's go over here. We'll start with the NASDAQ. This is the daily chart. So here's our follow through day. Here's the rally day back here. So if this gets undercut at any time, the follow through day has officially failed. But really, if we have a close below the follow through day low, there's going to be a high chance of failure. And we'll talk about those follow through day stats in our meeting on Tuesday in more detail. So we had the follow through day, came up, hit the 21 day break, broke down. We're still under the moving average lines. The NASDAQ's only above the 10-day, so it's under the 21, the 50, and the 50 and the 200 right there. And then also this red line is the official incorrection, so we're still over 10% down. And the NASDAQ actually went down 19.2% off the high. So it didn't quite get to official bear market territory, got very close. And of course, there's a ton of growth stocks that are definitely in bear market territory. And the RS line, still trending down, having trouble making progress. S&P 500, here's our follow through day. Again, came up, got above the 21 day, and got knocked down below it. It went down into correction territory, but is holding above that there. The NYSE, again, battling right here at the 50 and the 200. Of course, RS lines looking a little better here. And the Dow, same thing, battling at the 200-day, trying to get back above 50. You can see where our follow-through day is. It came down and just touched correction territory, and RS line slightly, overall trending up over that time period. Small caps look the worst. You can see the 50, 21, 10-day lines are just still diving down. They've all crossed over. And it's struggling to even get back above the 10-day. And this one went down and actually closed in bear market territory. There's your 20% bear market line. And the S&P 600, still in correction territory, moving average line still headed down. Doesn't look as bad as the Russell, but we're just not seeing any strength here. And if we go to the Excel spreadsheet, again, this was kind of Well, first I would note that I still just have 7 buying days and 13 selling days in the 25-day window. So that's still a weak tape. We're just not seeing any improvement there. It's more distribution dominant or selling dominant than accumulation dominant. And I got that from Mark Minervini, and that's why I track that each day. And I just color each day red or green or neutral. Like Friday, the NASDAQ was up, but the volume was down. So I just treated that as a neutral day. So here's our follow through day on Monday. Market school exposure went back to just an exposure of 1, stayed at 1, was back at 0 by the end of the week. And you can just see it's just a whipsaw week. So here were the follow through days. The NASDAQ was up 3.4%, S&P 500 1.9%, the Dow 1.2%. Did have a breakout that day, so we'll look at the chart. Had UPS breakout the next day. This day looked okay, week open, strong close. And then we had Google in the middle of the week, still a whipsaw day, but that definitely jacked the market up with their 20-for-1 split and their earnings news. And we had one breakout that day and Google gap. So we're going to look at these 3 breakout charts in a few minutes. And then Thursday, Facebook just slammed the market with that big miss. NASDAQ was down 538 points, 3.74%, S&P 500 2.4%, Russell 1.9%, Dow 1.4%. So that roiled the markets. And then Friday was kind of a whipsaw day. Also, I mean, NASDAQ was up nicely, but again, it was on down volume, and we had some wild stock movements. So shrink that back down. Well, let me see. Hold on. If there was anything else. Again, you have the MMTS trend lines changing colors. I mean, these don't change that often. It's a slower indicator, but it, went to yellow for one day on the NASDAQ, got slammed back to red. The Dow's still staying at green, and IBD went back to confirmed uptrend on the follow-through day. But again, the market school exposure model was back to 0 by the end of the week. So I think that's the main things to talk about on there. Look at the group teaching portfolio, back to the dashboard page. Not a good start to the year. We're down 7.84%, 28% invested, and that may be weighting a little bit too fast, as I'll have on another slide. We'll see. No full positions. These are half, and the one in TPG is even just 40% size. And none of them making any progress. This one's leveraged, so and it's only a half position, so it was a 12% stop. That's why that one hadn't stopped out, but it may stopped out. 2 of these are index ETFs. There just haven't been any strong quality stocks to get in. So it's not really a good picture there either, and we'll talk about that more. Also, when we get to our meeting on Tuesday. So let's go back to this. So we had the day 6 follow through day, had to squint to see it, had that volume push. And like I said, we're missing the lack of Canslim basis and basis setting up. I mean, good follow through days have these, and sometimes you'll even see a breakout before the follow through day. And while we may not be taking it under the rules, or you may be taking it if you're advanced and a rally day lets you try, 1 or 2 partial positions, but we just aren't seeing that. So wild week. I kind of walked through what happened. GSL broke out on Monday. UPS broke out on Tuesday, but really not true Canslim. Their sales are light, but I put it on the list and I put that footnote in there. Google spikes Wednesday. AR was the breakout. We had the Facebook face plant, and then Amazon tries to deliver the goods on Friday, but that chart doesn't look good. And then you had Snap on Friday. So it was down 23% on Thursday and it was up 58% on Friday. Just not, and the chart is still wrecked on that one too. So in light of all that, I'm sort of evaluating the market as a cautious one. Bias is toward a yellow light, waiting very slowly, maybe need to stop waiting. Especially true if we don't get some progress soon in some growth stocks and the indexes. I did see a few more stocks this weekend that we're trying to set up, so that was a little bit constructive. Let's just Look at this. Yeah, okay, so here was the IBD 50. So kind of just looking at the top 12 maybe. This one's forming a double bottom base. And you have to go through these, make sure they're good Canslim stocks fundamentally. Here's one forming a new base. Here's failed breakout on HLI. Matson, this one tried to break out, had a bad weekly bar, so that didn't look good. Blackstone, it shows the entry in a double bottom base. It's still just barely back above the 50. This one's below the 10-week line, but setting up in a consolidation. Stifle, nearing a breakout. Vertex, bottoming base. We'll talk about those a little bit at the meeting because I got a question on those. Still in the buy zone per this. Zim is extended. Dutch Bros recent IPO, forming a new base. There were some people took a early, you can kind of see a double bottom on that, an aggressive entry there, and a bottoming base, sort of. Double bottom here, and then this one, another financial stock out of the buy zone. So this top 12 looks better than it's looked. So that's one little positive. So I do mention that. So I'm sort of still, thinking red light, yellow light. I didn't put a train wreck slide in here because we did have a follow through day, and the market's trying to make some progress, but I'm not not thinking green light, like IBD has right now. But everybody's got to make their own evaluation, decide how fast they're going to wade. So we're sort of in a maybe situation. I need one of these with a question mark after it, so we'll see. And then I do stick this slide in each weekend. Lately, Canslim works better when the NASDAQ's trending above an uptrending 50-day line. We saw that we're not there. Works best when the NASDAQ's trending above an uptrending 21-day EMA line. So we're not there. Still a hostile environment, I think. We're below better and best still on the NASDAQ, which is important for growth stock investors. So let's look at couple charts. We'll just go to Market Smith. So to walk you through those three that I showed you. So GSL, this one, it does have Canslim numbers here. Doesn't have any fund ownership though. Top sponsorship over here on the right. It does have small fund ownership, but it broke out on the follow through day, and then it's come back all the way to the top of the sell zone. So that's not constructive. UPS, this one again did not have Canslim sales. It did have earnings just in this last quarter, broke out and has just sort of trended sideways. So that's better than, coming back down. If it closed below the follow through day, that would be a Mike Webster early sell rule that I use, not in that one. And then AR tried to break out, pull back, that's not constructive. And then I put Snap in here just because we talked about it. And so there's the big down day right there. You have to look to even find that bar. And then there's the big 58% update. Again, it's mired under the 50-day. This would not be on our radar, our watch list, or in our portfolios. And it's not Canslim trading to do anything with this, although they did put up Canslim numbers. I just view that as still a pretty wreck chart. So we'll see what happens. I mean, maybe it goes on, makes progress, maybe it can get above these moving average lines and build a new base. It has been profitable before, back in 2021. So we'll just see what happens on that. And I had Regeneron in my slide, but we'll look at that one during our meeting coming up and talk about it in more detail then. So our monthly meeting, so we'll meet this Tuesday. Here's the agenda. We'll look at the M factor, go over some secondary indicators, which I didn't do today. I'll go over Canslim nuggets from IBD Live over the past month. We'll look at the new Market Smith tool. You can put a moving average line on the RS line, so we'll take a glance at that. And then we'll sort of do three mini educational topics. The first one will be follow through days, sort of to be or not to be, and that's not really the key question. We'll talk about that and some failure indicators. Take a 5-minute break at 8 o'clock. Then I'll do a shorter segment on the Reg A mini IPOs, are these heroes or zeros, just so you know what these are. And we just had one that finally started trading, so I'm going to talk about it and give you my view on those. And then talk about bottoming basis just a little bit. Look at the group teaching portfolio. We'll go through everything that we've sold in there this year, do post analysis, those sort of things. Talk about the IPO market now, which not too much happening there. Talk about some watch list stocks, and then the last 15 minutes are usually we run over and go an extra 15 or 30 minutes, do open mic Q&A time, or you can type in questions, stocks that y'all are looking at that we may just want to talk about, and do live chart analysis. That really, I don't do that on Twitter or anything. I only do that during the meetings, because you need to have the charts in front of you, and there's just too much to comment on to kind of cover too much of that on Twitter. So that meeting's this Tuesday, 7 p.m. Eastern. You sign up at the Stockyard Meetup site, which looks like this. You just join as a member. If there's no fee or anything to join, and you just sign up for the meeting, and you'll get the email with the access information, and you'll get the email after the meeting with the recording, the slide deck link, and links on any articles in IBD or other places that are pertinent to the topics we covered at the meeting. So the tuition is $12. If you want to order stuff later, it's $15. I keep them and archive all that to send out. And if you're a first timer, haven't attended one of my meetings before, I send you a courtesy copy of the January meeting, the recording, the slide deck, and all the related links. So let's go there. Here's a list of prior meetings. If you're interested in ordering those, you just send me an email. I'll show you the email address in a minute, and I'll send you this list and how to order. If you don't have written sell rules, that's really important to have those. It's a great time while we're in a bad market to write those. So I was surprised it took 3 meetings, but it took me 3 meetings to cover all that. How to do it. We looked at all 3 sort of trading zones in all 3 setups, as far as like shorter term trades, longer term trades, portfolio management as part of all that also. So those are really important. And then in September, did an updated and expanded version of a complete weekend routine, followed up on that in October, and talked about the rally day, follow through day system back then. We're going to talk about that a little bit more. And then in January, we looked at prior bear markets, how they unfolded, and we did some post analysis. And we did rally day and follow through day. Obviously, that's pertinent, so we're touching on that in more detail at each meeting. So the 2 meetup sites are the Greenville Eastside IBD meetup and the Stockyard. The Stockyard is the one for coordinating online meetings. There's the email. Just shoot me an email directly, please. Don't do it through the meetup site because it gets screwed up. Just email me, greenvilleibdmu@aol.com, for a prior webinar ordering info, and I'll send you all that. You can follow me on Twitter, and then my YouTube page is The Stockyard by Greg Morton. Like and subscribe. You're watching this there. That's where I put the weekend reviews. There's a teaching video on how to use the group teaching portfolio spreadsheet. If you're not using a spreadsheet, if you're not keeping good records, that's another thing that you need to learn. Our meeting from May last year is on there in full if you want to see what a sample meeting looks like. There's a teaching video on the 8-week hold rule, because I think that's the most misunderstood rule in Canslim. It's really not even a rule, it's an exception to a rule, etc. So that's it for this weekend. I got to finish up the work for Tuesday night. Hope to see you there. It's always interesting. The market gets bad and our attendance goes down, which is the wrong. It's not what should be happening. We should be doing more studying when the market's bad and less. But we'll have 120 people or whatever come when we're in a good market, and we'll knock it down to 75 or something when we're in a bad market. So it's always interesting to me when that happens. But that's it. You guys have a great weekend routine. Have a big earnings week ahead of us again, so we will see how things unfold. That's it. I'm out of here.